Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, in which we take a closer look at some of the most interesting news items in the mining and exploration space. Joining me today is John Feneck of Feneck Consulting. John, welcome back to Kitco.
Thanks for having me back, Paul. Always a pleasure.
We are coming to the end of the second quarter results season. Barrick Gold reported net income of $811 million on Monday for the quarter to June the 30th, a 119% increase over the prior year. Better, but Barrick is still slipping versus its rivals Agnico Eagle mines, which saw a 126% earnings increase, Newmont at 145%, and Kinross Gold at 152%. John, what is your take on the June quarter gold company figures?
This has been a tremendous earnings season. Like, if you're on the sidelines or a generalist investor and you're looking at these numbers, you have to be getting more excited about putting money into the gold and silver sector, right? Newmont beat by 27 cents. Agnico crushed earnings. They're all three of the ones you mentioned producing tremendous free cash flow, and I think that's just going to be continued into future quarters, Paul, because the gold price is trending, right? That's what's different this time, is that it's trending at a very high price. So it doesn't really matter if we're at 3,200 or 3,400. It's between this range of, let's say, 3,100 to 3,400 for months now. So as a gold producer, like the three you just named, they're like stoked. They're like, hey, we're going to print money here. And this is exactly what we've been talking about on your show for a couple of years now. When the majors get to this point, you have to hold your nose and buy some of these things if you haven't already. Barrick, as a chart, doesn't look as good as Agnico and Newmont, but I think it will catch up. Obviously they had problems in Mali, like we talked about on your show last time. They had other issues that, as you pointed out, they're just not as profitable. They're not, their revs aren't, where some of the other companies are. But if you look at the tech and you look at the Mag 7, they're part of the Mag 7 in gold stocks, in my view.
Talking of printing money, newcomer Artemis Gold reported net income of $100.2 million in its first quarter of commercial production from its Blackwater mine in British Columbia in Canada at an industry-leading all-in sustaining cost of $805 per ounce. This gave it an all-in sustaining cost margin of 75.5%, some $2,475 per ounce. Wow. The mid-tier average is about an all-in $1,500 US. John, some incredible numbers posted there by Artemis, and it's not even ramped up to full production, and it's already a cash cow.
Agreed. Didn't they pick that up, Blackwater, from New Gold?
They did indeed.
Yeah. I mean, NGD looks like a good-looking chart, but I bet they wish they had that back. I mean, the AISC on Artemis is fantastic. Anytime you can get anything close to $1,000 an ounce, it is phenomenal, because when you look at the majors that we just discussed, I think Newmont's around 1,600 an ounce for perspective, right? So like Artemis looking really good here.
Artemis is crushing it, but with the high gold prices, there's a lot of companies whose all-in sustaining cost is more than $2,000 US per ounce. But at these gold prices, even those companies are making good money. Equinox Gold saw its Castle Mountain project in California accepted into the Fast 41 program, as was Paramount Nevada Gold's Grassy Mountain project in Oregon earlier this year. Paramount Gold just received from the BLM, the Bureau of Land Management, its draft environmental impact statement on Grassy Mountain. John, is Fast 41 having practical benefits for gold projects?
Yeah, absolutely. I don't follow much in California. I'm not really a fan of projects there because of the obvious, right? Everyone says, oh, but this is different. We're in a better county than you think. Well, yeah, show me how many California projects are in production, right? Like it takes longer, right? And Oregon is interesting. You mentioned Paramount Gold. I just talked to Rachel Goldman, the CEO, a few days ago. This stock is PZG. Fast 41 has done a lot for them. It basically has accelerated their path to permitting. So when you look at the August 8th news, I don't know how the stock isn't higher. I mean, it was announced at 67 cents. We're recording this at 67.5 cents. It basically hasn't moved. It popped to 72 cents, came down to 66 on a big seller yesterday. It's like, these are the opportunities you look for. When you look at a 5-year chart of PZG, this thing has crossed $1 a couple times. I mean, I don't know why it's not trending towards $1 US here at 67. So we've been buyers on that news August 8th. And after we're talking to Rachel, we got even more comfortable because, this accelerates their Oregon project, which, by the way, is way out in the rural part of Oregon. This is nowhere close to Portland, or else it would never get built. But I think she'll be the first permitted mine in Oregon in history.
And that project's right on the northwest edge of the Great Basin, which is the big gold producing area in Nevada, and it goes also into Idaho and Utah. I spoke with Mark Bristow this week, who is CEO of Barrick Mining, and on the subject of permitting in the United States, we talked about how US President Donald Trump is really trying to get the mining sector moving. And Mark Bristow mentioned that some of Trump's provision also include provisions that if you do not participate in public engagement about a mining project, you are excluded from litigation. Now, this is a measure that aims to address the extensive litigation period that is often involved in permitting projects in the US. Other CEOs I've spoken with said that they tend to tack on 7 years of development time to get through litigation as part of permitting. John, reducing litigation time for permitting of US projects, that is potentially a huge win for developers in the US, because that's one of the biggest time sucks for US mine development projects. How do you think this provision, or the provisions of the Trump administration, is going to improve things for companies?
Yeah, I mean, regardless of your political affiliation, you can't deny that Trump, with his executive order in March, kicked things off, demanding of his staff to get all of the, projects out there on his desk within, I think, 10 or 15 business days, whatever it was. And then in April, he doubled down and announced companies like we just talked about, like Paramount Gold, others, probably Equinox, were listed in April and May, by the way, in Fast 41 and other types of programs like that, which is really helping their stocks, I think. And now you have this, right? So I don't know if you also noticed, Paul, yesterday, August 13th, we had Trump announce $1 billion support US dollars for critical minerals. And we put out a piece to our clients this morning near the open, just saying, hey, this is just the beginning. Like, I don't know, like $1 billion sounds like a big number, but it's not. He's going to, if this is the beginning, then I think a lot of good things are to come for some of the critical minerals stuff, like we talked about in the last interview.
You've preempted my next talking point. I was going to mention that, as you mentioned, the US Department of Energy announced its intent to issue notices of funding opportunities totaling almost $1 billion to advance and scale mining, processing, and manufacturing technologies across key stages of critical minerals and metals supply chains. Funding is available for rare earth magnet supply chain, processes to refine and alloy materials for use in semiconductors, technologies for direct lithium extraction, for processes with potential to produce mineral byproducts from existing industrial processes, for domestically refining and recovering rare earth elements from mine tailings and waste streams, and battery recycling. There's a lot in there, John. You focus a lot on critical minerals in Canada and the US. This seems to be focused on the processing more than perhaps digging stuff out of the ground. What's your sort of real take on this?
Well, any step in the right direction is positive, right? And this kind of news was nowhere to be found in the Biden administration. So that's a very positive step forward. For that matter, it was nowhere to be found in Trump's first term, right? Like, things have really changed. This isn't just Trump getting bullish. This is Trump reacting to what he sees with China's dominance, right? And we're butting heads with China left and right here. So I think the world is starting to wake up to the fact that we're so far behind in this critical minerals race, but it's too late. I mean, we have to do so much more between now and next year. That's why I say this billion sounds great on paper, but it's just the beginning, which is so exciting for investors of stocks like this. I mean, you mentioned rare earths a couple times there. That was an area that I had to really educate myself in again, because I got burned in rare earths. I think it was in 2016. I never really went back to that part of critical minerals until last year. And I did that through a couple of my clients who were showing me stuff that I wasn't even aware of. I mean, I love to learn and I don't have all the answers. So they were bringing me stuff like, hey, what do you think of this? What do you think of that? And I'm like, I don't have an opinion. I have to do some research. I spent about 12 to 16 hours of time this weekend just researching stuff. I mean, this is the time you go for it, Paul. you have to be putting money to work in our sector right now.
Absolutely. I think one element that's often overlooked in these initiatives from Trump, obviously he wants to develop domestic supply of critical minerals, but another key element of his agenda is growing the industrial base in the US, creating jobs, and obviously developing processing facilities in the United States. It does that as well. Let's have some M&A. Mitsubishi is to acquire a 30% joint venture interest in Hudbay Minerals Copper World project in Arizona for $600 million. Mitsubishi will also make pro rata equity capital contributions towards the estimated $1.7 billion project cost, which received its final permit in January. Copper World is due to produce about 85,000 tons per year of copper for 20 years, with the project destined to become the third largest copper cathode producer in the US. Hudbay also updated a precious metal stream with Wheaton Precious Metals to include a $70 million payment contingent on a potential future mill expansion, in addition to Wheaton's initial $230 million stream deposit. Ongoing payments for gold and silver have been amended from fixed pricing to 15% of spot prices, providing Hudbay with upside exposure to higher precious metals prices going forward. John, the Arizona copper story continues to grow and expand and develop. How significant is this, Hudbay getting a cornerstone investor for Copper World?
That's very significant, but not surprising, really. Arizona is the number one jurisdiction in the U.S. for copper mines. Freeport-McMoRan is based right here. I live here, and it's a very supportive state. Of course, we have permitting issues like everyone else, and all sorts of things in the U.S. that have been historically roadblocks, if you will. But I think we're getting better. I mean, this is just evidence again of the need for more copper and doing so in a good jurisdiction. So Mitsubishi will probably be a long-term winner there. And hopefully we'll see more deals like this. There's a lot of great projects out there that need funding.
Now, the Trump administration, we mentioned it earlier, but it's really sort of doubling down on Arizona. Ivanhoe Electric has got the possibility of US Exim Bank financing its project there. A couple of months ago, we saw BHP and Rio Tinto get the permitting sorted out for its project there. Hudbay's got other projects in Arizona, notably the Rosemont project, where permits were given but then overturned by the courts. Are we seeing an environment where Hudbay could get Rosemont back on side?
I'm not really sure. I don't know the story too carefully. I just think that, the process, everything you're seeing in the U.S. right now, Paul, is bullish. Like, we just kind of outlined it, right? We talked about the original executive order in March, then the follow-up by Trump in April and May with the different fast tracking of stocks like Equinox, Paramount, and a bunch of others. And now we're seeing this critical minerals thing announced yesterday. I think the news flow is going to be continually positive. And that's why when we saw Trump really take a substantial lead in the polls last summer, we went all in on U.S. mining stocks. We have a lot of exposure to the U.S. and we're not going to stop. I mean, we'll continue to add to these positions on dips because we're in a bull market.
Another M&A transaction in the US, also in the Great Basin in Nevada, was Minera Alamos, there to buy the 40,000 ounce per year Pan gold mine from Equinox Gold for $115 million in cash and stock. The transaction also includes the nearby Gold Rock deposit. In total, that's about 775,000 ounces of resources, which means Alamos is paying about $148 per ounce, or excluding Gold Rock, $399 per ounce for production. John, good to see Minera Alamos making a bold move there. They've been, I think it's fair to say they've been struggling with what they're trying to do in Mexico. This gives them a good shot in the arm, cash flow, all important at this stage in their development. Yeah.
But did you say they were spending $148 an ounce? Is that the number, or
on the global resources of both projects? Yeah.
Okay. I mean, I think that's high, versus I looked at the deal for a client, right? And I think that what I came away with was, number one, their share structure is big. Like, it was over 500 million before the deal. If I'm not mistaken, they had to issue like 97 million shares or something. I just looked at this over the weekend. And that gets them closer to 600 million shares out. Like, that gets me a little bit frustrated as an investor. And secondly, if you look at the deal that day, Paul, when it was announced, I had a couple of clients email me and say, "Oh, Alamos is going to get popped here." They were down 20+%. So, I mean, it's dilutive, and maybe it works out. I don't know, the projects very well, but that's business. There's buyers and sellers, right? So, like, we see how it pans out. I would disagree that, not with you, but I would disagree with their strategy of, well, let's just say that Mexico, to me, looks like parts of Mexico are going to work here under Scheinbaum. We saw Sonoro Gold, SMOFF, just last week on an interview with my YouTube partner, Don Durrett. These guys are telling us they're going to get permitted this year. I mean, now maybe they're one of a handful of companies that are going to get their permit. But if that's the case, like, as a 12.5 cent stock, I'd be buying that versus Minera, because Minera may be telling you we're not going to get our permit in Mexico with this news. I don't know. I just don't know the company. I don't know enough about it to go out on a limb there. But we're playing in the area that we know, Paul, right? Which is picking up the phone, talking to CEOs that we do have relationships with, and seeing where things are progressing in Mexico, and reading the tea leaves.
Now, Minera Alamos' stock had a 2-week anomalous blip prior to the deal announcement. It jumped up quite a bit a couple of weeks before the deal was announced on much higher than average trading volume, but rapidly fell back about 26% on the news, back to the level of the bought price deal point, which was about 36 cents per share. Maybe there's something there that the market didn't like either. Also buying projects, Barrick Mining is to sell its Artemis Gold silver project in Chile's El Indio belt to Singapore's Boru for $50 million in cash and a 0.5% net smelter return royalty. Artemis holds 2.2 million ounces of indicated and 3.6 million ounces of inferred resources, meaning Boru is paying about $23 per ounce of indicated resource, or $8.60 per ounce of the global resource. John, Barrick Mining has said time and time again it's not going to pay a premium for M&A. However, it does seem to be selling its non-core assets at a discount. Or is $20 to $25 per ounce the going rate for exploration assets?
Yeah, hard to say. You saw Newmont divest of a lot of assets this year, right? And then their stock price took off. So maybe a leaner and meaner Barrick is what the market wants to see. I don't know. It has been mired in the muck versus some of the other majors, correct? I mean, that chart doesn't look, the ticker is B. That chart does not look as juicy as an Alamos or an Agnico, or you name it.
I think one of the wonderful things about this sector, John, is that, and I'm not saying Barrick is this, but even the worst dog in your portfolio will have its day or its week when it's the best performing stock. Barrick's got a lot of big catalysts out there, namely the Lumwana expansion, and then in a couple of years' time, first production, hopefully, fingers crossed, from its Reko Diq copper gold project in Pakistan. As we get nearer to those moments of time, Barrick's going to have its re-rate opportunity, I would imagine. Would you concur?
Yeah, we bought some between 18 and 19 and a half. That was sort of my discipline down there. And now it's at 23 plus. So, that to me is a good return. I'm one of those guys, Paul, that looks at the market history, right? Like, if you look back at the S&P going back to the Great Depression, you've got, I don't know what the average annual is now because we've had crazy years recently, but let's call it 8% or 9%, right? I mean, that's better than 8 or 9% right there. And I bought the position, I think, 8 to 9 months ago. So it's like people are bashing Barrick. They're performing. They're just not performing as much as some other gold stocks.
I think that's a very prescient observation. We know everybody else is doing really, really well. So companies that are just doing well perhaps get overlooked. Let's end this week with a trip to Yukon in Canada, where I participated in some site visits last week. A lot of good energy and excitement there in the Yukon, with large drilling programs at Banyan Gold, Snowline Gold, Sitka Gold and Fireweed Metals, plus discovery potential at Rackler Metals and others, and an emerging copper story with Gladiator Metals. Thank you to all the companies that hosted me. I also got the chance to meet with Curry Dixon, who is the leader of the Yukon party and potentially the territory's next premier following elections later this year. John, how does Yukon stack up for you as a jurisdiction for mining and exploration investment?
Well, Yukon's had a couple of black eyes in recent years. You had Victoria Gold, which you and I talked about earlier this year. I think it was January, February, failing. You had Alexco, AXU, a couple of years ago get absorbed by Hecla at pennies on the dollar. They just couldn't get it done. So there's some historic misses, if you will. But I think the wins outweigh the losses, and that district has gotten an unfair black eye in general this year because of Victoria. So we kind of, as value investors, will sift through the rubble on that kind of news. And we found this stock right around that same time of the Victoria news called Triumph Gold, TIG in Canada, TIGCF in the States. And John Anderson mothballed that project for a couple of years. So he did kind of the opposite of Banyan, which has been going for it and producing more ounces, but also diluting shareholders with their share count. John did a different thing and said, look, I'm not getting paid to drill right now, so I'm not going to drill, but we're going to maintain our interest in the stock and add to it on dips. Now he owns 10% of the stock. Michael Gentile and others own significant portions of the stock. So when I did the math, it's over 40% held in good hands, and there's not a huge share count out there. So that's a stock that we like. And then you do a deeper dive, you find out that their 2013 PEA didn't include their silver, didn't include their tungsten, which is 15 million pounds of tungsten sitting in the Yukon. There's actually a town called Tungsten out there. And so I'm curious to get your take on fireweed, because, fireweed is obviously one of our holdings and they're in that same region. But stocks like Triumph don't come along at these prices very often, because don't you think, Paul, that this is an interesting dynamic where a company like that just hasn't updated their PEA, right? Or they haven't gone to PFS. There's nothing wrong with it. It's like they're just being prudent with capital, which is unusual for mining, right? Where guys are just spending money. And it worked for like an Abra Silver, right? They've gone along the way. They've done all the right things. Stock's kicking. You know what? Like, I mean, it's. I just interviewed John Maniotis the other day, and I was very impressed. But companies like Triumph don't have the kitty that a Abra Silver has with 40 million in the bank, right? So they do it more methodically, and that there's nothing wrong with that. It just takes longer. So what really attracted me there was the tungsten. As you know, I have a large weighting of our portfolio in tungsten-related stocks right now. And to find out, when you do the math on 15 million pounds, like, even if a lot of those aren't profitable ounces down the road, like, some of it is going to be very profitable, and none of that's factored into their PEA.
I'm glad you've asked me that question, John, because it gives me a chance to be sort of devil's advocate. I take on board your point about, not drilling when the market's not there, not spending money, keeping the share count very much under control. But isn't there a danger of being over-aligned? As you said, Mr. Anderson's got 10% of the company, so he's highly sensitive to, or highly sensitized to, any dilution. And the result of that is the company does small raises. I think it raised, $1.5–2 million earlier this year. It's not going to be able to do a lot of work with that, while competitors in the space, you mentioned Fireweed Metals, they're drilling tens of thousands of meters. Snowline's drilling tens of thousands of meters. So they're not going to get market recognition. It's going to be very difficult for them to get the market to look at them, because their pace of increment is so slow. As you mentioned, You've got a very good win on Barrick Gold in a matter of months. Are investors in this kind of market going to wait for that 2 or 3 years for them to get to their promised land?
Very good point. Most investors won't. Most investors don't have the patience to see a project through from exploration to development to production. Let's be honest. There's a lot of risk along the way for many of these stocks. However, if you make the call to the CEOs like John Anderson and others that we talked about today, you'll find that there's a lot of good things happening there. And it's all publicly out there. The tungsten's in their report. The silver stuff that they just bought in Utah for 150 grand, it's out there on their news items. It's like, It's like you start seeing, okay, here's a gold company that's transitioning into silver and tungsten, possibly. Very exciting because the share price hasn't moved much. But, like you said, if you start, let's say they raise $5 million, right? Instead of $1.5 million or $2 million, that's a good point. Then they can start drilling their silver project in Utah. They can do some work on tungsten. They can update the PEA. Boom, stock responds, right? Like that's what I think we're going to see a lot more of down the road from juniors.
We're certainly in a market that wants to see drill, baby, drill. One final sort of comment on Yukon. As you mentioned, Victoria Gold has been a black eye, but looks like there's going to be a stake applied to that black eye later this year. The government is advancing with its sale process, and from the people I spoke with, appears very confident that it will get a buyer and a good buyer for that asset before year end. That's all for this week. John Feneck, thank you very much for joining me again.
Of course, Paul. Thank you.
And of course, to our viewers, if you like what you see, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.